everybody, to the weekly edition of the Not Your Average Investor Show. Today, we're talking about rent, macro trends in rent, micro trends in rent, and local statistics in rent, and why it all matters. After a couple of interesting articles by boy Keith Weinhold, we're gonna dive into that. Welcome, everybody, to the weekly edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. With me, as always, a man that I affectionately like to call GC because he's got the genius concepts, knows how to generate cash flows, he's a great co-host, and because his name is Gregg Cohen. Say hello, Gregg.
Hello, everybody. Fantastic to be with you today.
GC, we are talking rents today.
Yes.
What's the deal with rents? I mean,
In this economy?
In this economy, just frame it for me. When, as a real estate investor, why do I care about rents? We talk a lot about pricing on the show and home price appreciation. Why do we care about rents?
Rents make this thing go. Rents make this investment stable, consistent, provides that income stream, which that income stream is what keeps you in the game so that all 5 profit centers can pay off for you. And the great thing is that improvements in rents, small improvements in rents have dramatic income potential and dramatic income consequences, I guess you'll call them, good things that will happen. And the reason is because as your rent goes up, the majority of your costs stay fixed and that income grows and grows and grows. That's part of the reason why we talk about these profit centers and specifically net rental income being like a fine wine. Rents are important day one. And then continued rent growth is important as this asset matures. And it gets better and better and better with time, as we see when we feature clients. We see them 5 years, 10 years down the road, and their cash flows are enormous. Well, that's because rents continue to grow over time because of supply and demand.
Yeah. If you think about each house as its own little business, right? Rent is revenue and, everything else is cost, right? So when I think about it, I think of, what are my, like any business, what are my fixed costs? What are my variable costs? And then what's my revenue? Yep. The majority, like our biggest cost is a fixed cost, right? It's locking in this mortgage payment for 30 years and getting that dialed in. And then there's other variable costs, right? Like maintenance costs, there's other things like insurance and things of that sort. Rent is the revenue. Rent is your customer as a rental property investor is your resident. And your resident pays you via rent. And rent goes up over time, right? For a variety of reasons. We're going to explain some of those today and a couple of other macro trends that are happening. How'd I do there?
I think you did a great job.
Yeah. Okay. Well, thanks, buddy. So the first article that we're going to talk about is from Keith Weinhold. These are actually 2 articles from Keith Weinhold. I'm going to put up this graphic that he showed. And it's essentially talking about how people are renting longer, right? The numbers that we're about to see on the screen are about adult milestones that continue to happen. And Keith is making the point that, as these adult milestones continue to be delayed, rents, people are renting longer, and that means there's more demand for rent over time. So essentially, these are, if you're looking at this graphic, we're looking at people hitting these milestones at 30, right? The first is 83% of 30-year-olds in 1985 used to live on their own. Right. Now, 67% of 30-year-olds live on their own, right? 77% of 30-year-olds in 1985 were married or had been married. Now, 45% of 30-year-olds have been married. 59% of 30-year-olds in 1985 live with a child, right? So like had a child or were raising someone's child. Now 36%, right? Precipitous drop. And then here's the doozy, right? 48% of 30-year-olds used to own a home, while now only 29% of 30-year-olds own a home. And then there's one number in these milestones that's going the other way, and that is having a bachelor's degree. In 1985, 25% of 30-year-olds had a bachelor's degree. 43% of 30-year-olds now have a bachelor's degree. GC, when you see these numbers, what are you thinking?
I just think of this incredible wave of people that are acting differently and behaving differently now. And from the investor lens, when you see these huge swaths of populations that are changing from 80% to 65% or from 50% to 29%, you want to situate yourself in having something that that new buyer behavior wants.
Yeah.
Right? You want to situate yourself in something that that 30-year-old who now is doing something different today than they were 30 years ago or 40 years ago will want. And that is it's a ton of new and different demand than what was present in, you know, the 80s or the 90s that were not there.
Yeah, totally. I mean, just looking at the numbers, if there is, you know, like if we're talking about, I am essentially either the oldest millennial or the youngest Gen X, right? I keep seeing, I saw something about Gen Xers. I saw an article about it. It was like 45 to 60 as Gen Xers. I'm 45, right?
Mhm.
So you could put it in either one. So there's this whole wave of people that are our generation. That's one of the biggest generations that we have on the planet, right? It's like the boomers and the millennials. And that entire generation has essentially waited longer to buy a home than any generations before that.
Right.
Right. What are they doing when they're not buying homes? Yes, some are living with their parents, as you can tell by these statistics, but the majority of these people are living on their own, right? They're renting, right?
Yes.
They either got roommates or they got their own place or whatever they got going on. And I just don't, you know, when I think of it, I wonder, is this a trend that is like, is this a trend that's going to continue, or is this like a singular generation kind of like behavior? Like, are millennials weird? What would you think of? Like, is this something that's going to continue, or is this like a blip?
This isn't a moment in time. Home ownership percentages have been going down over the last 2 decades.
Yeah.
A lot of it really started to happen when we went through the Great Recession, and this dream of home ownership became a nightmare for a lot of people.
Yeah.
And there's still a lot of scars and wounds that are open there from people who lost their home,
Yeah.
you know, 15 years ago, 20 years ago, and now kids who witnessed that.
Yeah.
So this was already moving in this direction of an increased rentership society.
Yeah.
But now there are a lot of additional factors that are promoting this rentership society.
Yeah.
The fact that technology allows us to be a lot more mobile and we can work wherever we want. We're less tied down. Well, rentership allows you to be less tied down.
Yeah.
And then there's the affordability challenge, right? Buying a home today, if you look over the last, 5 years, is so much harder than it was the previous 10 years to that. And so when it's harder to buy a home, everybody still needs a roof over their head. That is a natural segue to kind of promoting the rentership society.
Yeah. And you know, another thing that I think of, GC, is like I remember graduating college in 2003 and looking to buy a home immediately, even though I was gonna be moved around the country and whatnot. But I remember even at that time, I guess when the interest rate thing happened in 2001 and homes just started shooting up in price, it was just one of those moments where it felt like every other week I felt like I had missed the bus kind of thing, right? Like I remember being in like Weston in like the outskirts of like West Broward County, Miami, and be like, damn, this thing was like 85 grand a year ago and now it's like 200 grand and I missed this. And I feel like for this entire generation of, you know, like I'm an old millennial, I graduated right around that time, right? Like if I would have gone a little bit out a little sooner, I could have bought a home at a super good price, kind of like rode all the way up and then down and then back up if I needed to, right? But like we all graduated in those subsequent years and then hit that wall in 2008, 2009. So we lived through this crash and we lived through this like inflated pricing and a period of uncertainty of, do you really even need a home? And now you turn around and it's like, it doesn't feel like I guess the point I'm trying to make is that was happening at the same time I graduated making about 48 grand a year, and kids are still graduating making about 48 grand a year.
Yeah.
Right. Yeah. So there has been this kind of like overall super increase in home prices, and there hasn't been that big of like increase in starting salaries coming out of college. So like add that to the idea that way more people have college degrees, there's more student debt, income hasn't really kept up.
Yeah.
So it just takes a while to save up for home. It took me for a while. I'm one of these people that finally bought my home at like 40 plus.
Yeah. Everything you're saying is very real. incomes don't typically keep up with home price growth, and definitely not over the last 5 years, right? Home price growth over the last 5 years is probably, you know, 40% or close to 50%.
Yeah.
And, incomes, of course, have not kept up. But even in normal times, it's really hard for incomes to keep up with home price growth,
Yeah.
especially because in the United States, we are undersupplied for housing.
Yeah.
And generally, we keep our interest rates, I'll say, artificially low because of a lot of things that we do from a government perspective.
Yeah.
And so you have that increases demand, you have low supply, and home prices tend to outpace wage growth. So it's sort of always kind of been that way for the last, I don't know, 30 years or so.
Yeah.
But now it is exacerbated.
Yeah.
And everything that you just mentioned there, if you take the baseline here, which over the last, call it 20 years, there has been this move towards preferring to rent, even if everything was held constant.
Yeah.
And then you add all those components on to that,
Yeah.
it really has, promoted this rentership society. And so then as an investor, whatever you're investing in, if there's something that's a dramatic movement and there's a huge population of people that now demand something they didn't otherwise demand, renting properties is that dramatic movement that's happened over the last 30 or 40 years, and especially over the last 20 years. People just don't look at owning a home the same way they used to, which creates an opportunity as an investor to own that home, because unless you think that people aren't going to need a roof over their head, they're going to move to renting. That increases renter demand, and ultimately that makes your profit centers that much better.
Yeah. And I think back to the thesis of this article, right? We're talking about adult milestones. I think we've talked about this some on the show. Investing in a rental property is a financial decision. Buying a home is more of an emotional life stage decision.
Yep, absolutely.
Right. So if we're looking at these things and we're seeing, this idea of people living on their own, going down at 30, that's probably financial. Like I would attribute that to like this disparity in pricing, right? But like not getting married before 30, right? That dropping precipitously from 77% to 45%. I don't see that reversing. That feels like, hey, we figured out that, like people just aren't marrying young, right?
Yeah.
Like I think there's other macro kind of like trends around like kids not really dating these days,
Right.
and like these kinds of things happening, right?
Yeah.
So I look at that trend, that seems like, I don't know if that's financial or not, but that doesn't seem to be something that's going to reverse.
Right.
Living with a child, from 59 to 36, I don't really have a take on that, right? Like I feel like that's one of those things. I guess people are having kids later, probably a financial decision. Do you have a take on that?
Yeah, definitely. I think it just goes in part and parcel. If they're living on their own less and they're getting married later, it's likely that they're going to have a child later in life.
Yeah.
And I think the financial part of that is definitely on the minds of new parents for sure. So yeah, I think it's a financial, and I also just think it's a lifestyle change. It's not only financial, it is a kind of a new way of younger people operating. And it's definitely related to the last one going up, which is having a bachelor's degree, right? Yeah. Focusing more on your education while you're young, maybe less on who you're going to get married to and having that child.
Yeah.
It all sort of makes sense from a lifestyle perspective.
What I don't see here in this chart is the cost of education has gone up significantly as well.
Yeah, it's interesting. Yeah.
Right. So that is this idea of having a bachelor's degree. I wonder how you also compare that to the cost of a bachelor's degree from 1985 to 2026.
Yeah.
I would assume that is would blow all these numbers out of the water.
Yeah.
As far as something that's gone way up.
Honestly. And the access to credit to be able to do that is so easy to go into student debt. We don't talk a lot about it, but if you want to see why both demand has skyrocketed and supply has skyrocketed and price has skyrocketed, the funding behind it definitely has an influence on that for sure.
Another milestone thing that I think we're talking about with, this idea of like you can live anywhere, portability is kind of new.
Yeah.
But I do think that over the last, in our career, we were probably, maybe Gen X started feeling this and we're the ones that really started complaining about it. But like, it feels like prior generations to us, the idea of like, hey, I worked at this company for 30 years was a real thing. And that completely has gone away, right? Like the idea of somebody that works, nowadays, somebody works somewhere for 7 years. It's a really, really long time.
Yeah.
And you look at LinkedIn and everybody has like 2 years here, 2 years here, 2 years here, right? So this like optionality of moving around. I think that's been here longer. I think corporations have kind of like adapted to that mindset way before,
Yeah.
and people have had to do that as well. So that's
Yeah.
another one that stops people from going
Exactly.
too.
Going from pensions to 401ks and from a defined benefit to a defined
Yeah.
contribution type of
Yeah.
model for retirement accounts has led to less loyalty between employers and employees. So
Yeah.
all of this from a lifestyles perspective, you can understand that a average person today certainly does not go to bed at nights thinking to the same regard, hey, listen, I can't wait till I own my first home.
Yeah.
It may be their path, it may not be a path, and everything is totally fine and open. Whereas, in generations in the past, kids went to bed at night thinking, hey man, I can't wait to own my first home. It
Yeah.
is like a badge of honor. Like I
Yeah.
did this, and it's just not the same way today.
Just not the same way. So I would just say, if we're looking at this from an investor lens, what's the takeaway here?
Well, when you see that there is demand in a place that there wasn't demand before, how do you situate yourself to be able to take advantage of that demand,
Path of
right?
progress.
Yeah, this is a path of progress. You saw
Yeah.
the path of progress when you saw, all of those stats going from 85% of 30-year-olds did this
Yeah.
to 60%,
Yeah.
or 50% of 30-year-olds owned a home to now only 29%,
Mhm.
right? Look at what's on the other side of that and make sure that you own the thing that they want there. And, obviously that's where rental properties win, right? There's only two ways to have shelter,
Mhm.
generally speaking, right? You either own it or you rent it.
Yeah.
And so if people are not desiring owning as much, that means that, and our population is growing, and that means that people are desiring renting it.
Yeah.
And that's great for when you own the asset. If you want to be in control of something that there is high demand for and growing demand, and for what we just talked about right there, it doesn't seem like the demand is going to shift back to the way it was, because this is just the new normal for this somewhat of a rentership society that we live in.
Totally, totally. I wonder how much people think about this, right? Like, I wonder how much. I think everybody on this call, everybody in our community, we think about real estate as a great investment. I would imagine that like most of us have just thought, hey, the most millionaires or whatever, like the best path to wealth for Americans has always been real estate. I wonder how much this like concept of rental demand is going up. This is a critical need. This is starting to become like critical infrastructure, particularly when it comes to workforce housing in these growing cities where these dynamics are playing out. We're going to talk about the supply side in a second.
Yeah.
But like I wonder how much that is in like the collective consciousness of, man, this is something that demand is irreparably going up for longer, right? Like whether we're growing as a society or not, it seems like we are outpacing the demand for rental homes than the supply that's out there.
Well, we have been not keeping up with supply for the last 2 decades.
Yeah.
But now the factors at play here signify that the problem is getting exacerbated,
Yeah.
and we're not catching up.
Yeah.
In fact, this year, new construction starts are down compared to the previous year.
Yeah.
And so the problem is being made worse when we are not building housing supply overall, and specifically rental housing supply, and then specifically workforce housing supply, because that is typically the type of housing supply that is forgotten about.
Yeah.
That is typically an area that many home builders do not play in,
Yeah.
and therefore, and it's hard to find government incentive dollars to be able to support it, especially in an environment like today. So if you kind of go down the trickle line here, right, we need more housing overall, housing, for sale housing and for rent housing. But we definitely need more for rent housing because the demand is far outpacing the growth for rental housing, as what we just showed.
Yeah.
And then workforce housing is the most needed part of rental housing demand.
Totally, totally. All right, so let's talk about the supply side, right? Because the next article that we talked about is about rent inflation and this idea that you look across the U.S. average rent has gone up by 36% since 2020 till now. Charted all these different kinds of cities, right? Some were 14% in the Austin world. Others are in the 53% threshold. One of the things that the article talked about is like, as all of this stuff is going up, it's the places that built the most multifamily where this hasn't affected as much, right? Like this is a supply conversation. This idea of where things have gone, whereas like the places that have stayed with the single family rental properties, rent inflation has continued to rise at an elevated amount. What do you think about this, GC?
Yeah, rent's gone up a lot more since 2020 than it has in normal 6-year increments of time.
Yeah.
I think we know why that's happened. There's the supply side of it, and then
Mhm.
there's the demand side. As population continues to grow in those cities where you saw a lot of population growth, you saw those cities start to see very high rent price growth numbers. Something else to keep in mind there, that chart is showing both multifamily and single family rent growth.
Mhm.
I think if it actually broke it down between multifamily and single family, you'd see two very different things play out.
Yeah.
You would see single family really grow substantially more in the Sun Belt markets.
Yeah.
And you would see some things in some areas in the Sun Belt markets, you would see multifamily rent growth actually declining,
Mhm.
which would highlight what you were hinting at, which is the difference in multifamily supply for the Sun Belt market versus single family. Long way of saying rents have been going up, like my market, Jacksonville, every year on the single family side. But especially over the last couple of years, multifamily rents have actually declined.
Yeah.
And that's not because people are leaving Jacksonville. It's because it was overbuilt specifically on the multifamily side. So that would be a nice additional part of that graph,
Yeah.
but it kind of takes it all together. And largely what you see is rent price growth has been larger than normal for everybody in the United States since 2020 because a lot of those macro factors. And specifically, you're seeing a lot of rent price growth happen in the markets where people are moving to, like the Sun Belt.
Yeah. One of the nuances in this is basically talking about how, yeah, this stuff has gone up, but just the inflation piece alone makes it like a really attractive asset. The article breaks down the scenario where just an average, like a 3% rent increase increases cash flow by 18%. It
Mm-hmm.
breaks down the numbers as like if you're at a $2,000 rent, a $1,000 mortgage, expenses are $800, and cash flow is $200 a month,
Mm-hmm.
and a rent increase goes up to 2,060. Now you're at a cash flow of 236,
Mm-hmm.
right? So it's almost kind of like it reminds me a lot of like the conversation around leverage that we talk about when it comes to returns. It's this idea that your rent increases as a percentage of your total um, your total rent,
Mm-hmm.
and your cash flow increases a percentage of total rent, but your cash flow is often smaller than your actual rent. So it's like a bigger piece of the pie. Is there a better way to explain that for people?
I don't know if there's a better way, but I just need people to understand that this is the basis of why rents get so much better with time.
Yeah.
It's when we talk about buying a rental property right off the bat, we openly discuss that cash flows in the beginning are not life-changing. It might be $100 a month positive cash flow. That's nothing that you're going to go and tell your friend, hey, listen, you got to go run and do this investment. But when you hold on to it for 5 years or 10 years, that $100 a month of positive cash flow, now it might become 500
Yeah.
or $700 of positive cash flow. And the reason is just what Keith pointed out in this article. It's
Mhm.
because the incremental effect of a 3% or 4% increase in rent is dramatic, mainly because the expenses on the other side, the majority of them stay flat.
Yeah.
So you get an outsized gain every year from rents going up on average 3 or 4%. And this is why cash flow does not change your life day one when you own rental properties, but cash flow does change your life in 10 years when you need it, or
Yeah.
15 years or 20 years when you need it. And you sit back and you're like, oh my gosh, I remember buying that property and it wasn't for the cash flow.
Yeah.
But ultimately, you wind up in 10 or 15 or 20 years and you're like, now I can build my retirement homes.
Yeah.
That's exactly how it goes.
Yeah, yeah. I guess in all these discussions of rent, it always comes back to the big advantage is that you have this like fixed cost in comparison to this like rising number of revenue, right? Like
Exactly.
it just continues to happen in a pretty inelastic way. Like I guess one of the things that the article did say is in the last year, rents have been pretty flat,
Yeah.
right? Which
Mhm.
has been the same thing here in Jacksonville as well. But when you look at it, the overall pie, it's just kind of like the longer you wait, the more that this happens. Because again, we just talked about the demand side, that
Mhm.
continues to happen. On this one, it's talking about the supply side not being able to keep up. GC, you put some numbers together here that I wanna go over in comparisons because it talked about multiple cities and you brought it back to Jacksonville. You want to talk us through this?
Yeah, I just love comparing real numbers between rents, population growth, and median income. Those are the three Well, if you think population growth and median income, those are the two inputs that largely wag the dog of rent price growth or rent price appreciation here. And it's very telling if you look at different parts of the country, what's happened. So I actually pulled the numbers. I did 2021 until 2025, and I did rent price growth, population growth, and median income growth. And I pulled some of the different parts of our country. So we looked up San Francisco and Seattle, and we looked up to see rent price growth for San Francisco. San Francisco's rent price growth since 2021 is the lowest in the country. That's why I put it there. And if you think why, well, then you look at population growth. Well, population is basically flat. And a whole lot of people have come into this country since 2021, and a whole lot of people have moved to different places. Not many people additive to the population of San Francisco.
In the last 5 years.
In the last 5 years, right? Their incomes have gone up, actually more than I expected. They've gone up 19%, but you know, that's because it's San Francisco and Silicon Valley, right? So you still have median income growth, but you don't have people living there, so you don't have the demand. And then ultimately, you have the lowest rent price growth in the nation, since 2021. Seattle, Washington has 11% rent growth. So that is actually, I think, one of the lowest, maybe bottom five of rent growth. So Seattle, another major city, a beacon of our country here. But ultimately, what's going on there is you've got population growth, which is actually pretty normal. About 5% population growth is pretty normal if you look across the U.S. Actually, a little bit higher than the U.S. average, but their median income growth is really low. So if you think median income growth and population growth are the two inputs that largely lead to rent price growth, well, their median income growth is struggling. So ultimately, that's going to keep rent prices down. Then you can look at Washington, D.C., another one on the lower side of rent price growth. So 17% rent price growth since 2021. Kind of normal or average population growth, and median income growth, sort of normal, a little bit below what the national average would be. Boston, kind of similar, right? About 20% rent growth, population growth around 4%, and median income growth around 21%. So if you don't see anything noteworthy as far as population growth or median income growth, you're probably going to be on the slower side and a laggard when it comes to rent price growth. And that's what we see in some of our major cities. But then you compare it to Jacksonville. And little old Jacksonville, we've had 25% rent price growth, with especially compared to 9 or 11% for San Francisco and Seattle. That's a whole lot more dollars that are coming to owners of rental properties here. And the reason is because we have two things. The two inputs are really working together. We have 9% population growth since 2021. We're actually the sixth fastest growing population just 2024 to 2025. So we're actually speeding up our population growth in Jacksonville, because the story's out.
And we're the fastest in Florida, right?
We are the fastest in Florida. Absolutely. Right. So that's that demand part of the equation. And then you've got the median income, which supports that demand. Median incomes in little old Jacksonville have actually risen more on a percentage basis than San Francisco, Seattle, Washington, D.C., and Boston. 22% median income growth. And we're just on the doorstep of all the great things that we talk about downtown, the University of Florida, the Stadium of the Future, our Pearl Square neighborhood that's really a catalyst for additional median income growth. So little old Jacksonville's far outpacing some of our major metros, and it makes sense. People have a flight to quality, and in terms of quality for where they're living, they're looking for quality of life and low cost of living. And Jacksonville checks those boxes.
I think I look at this chart, and the obvious thing is to see, all right, when you're doing well on population growth and median income growth, of course, rent prices are going to grow higher, right? Like as a percentage. The other thing I think about here is a 9% rent price growth in San Francisco is a massive number, because rents in San Francisco are really, really high.
Good point.
Right. So like I feel like there's a part of me that's like, okay, cool. Rental property investors are probably still doing pretty well with like increase in rents, as well, as far as like an overall cash flow number. But I also just think, man, when you are in an underpriced market that is below the national median in pricing and whatnot, then you can expect these higher leaps, because as we've learned, Jacksonville is a really good deal. It's got this kind of like I'm not surprised that Jacksonville has, the highest immigration in Florida, and it's the sixth biggest like growing metro when you're thinking about good median income growth, and this idea that like we're still below the national average in price as well.
Yeah. Yeah. And to your point of 9% growth on a much higher rent in San Francisco, if you already owned that asset,
Correct.
9% in like nominal dollars
Yeah.
is a lot,
Yeah.
right? 9% on a $3,000 rent or $5,000
Yeah.
rent is a lot, but as an investor, you really got to pay attention to the percentages here. Because in order for you to own that property in 2020 or 2021 in San Francisco, probably cost you over $1 million to own it.
Yeah.
So your cost of entry is really important. And that's why when you're looking for where to invest your dollars, think about rent price growth and home price growth as a percentage basis, because that helps you to see how little can you get into that market for, and then how much is that going to grow? That's going to deliver the highest return on investment for everybody.
Yeah, all these numbers, when you're the one holding the asset, you're always going to do really, really well, right? Like this is why it's great it's great, it's great to hold real estate because it continues to get better. So people that already own those assets in San Francisco and Seattle and all these places, they've benefited over time. And like, the lesson to me is, if, let's say Jacksonville is going to be an expensive market in 30 or 40 years or whatever, if I'm holding it and the rent price growth decelerates, I'm still making overall more and more cash flow, right?
Right.
These new investment decisions are a different kind of like beast, right? Like when we're looking about where to put our money right now, if I'm someone living in San Francisco, do I want to invest in my backyard or do I want to invest in Jacksonville? No brainer, right? You want to go where your money's working harder, where you have the positive cash flow, where you have more upside, and like you can buy multiple assets for the price of one over there, and you have positive cash flow and all these other good things happening.
Yeah, I think that's really important. Something else to think about is, let's equate this to normal traditional investing speak. Well, rental income and cash flow is a dividend, right? It's a dividend.
Yeah.
So the fact that we're sitting here and we're looking at how much your dividend has grown as a percentage basis in all parts of the country is noteworthy. That's what makes this asset class really great to invest in. It's not like if you go to other asset classes and there's a built-in dividend growth model.
Yeah.
Right. The dividend is what it is. It's going to be here. It's going to be that way, most likely 3 years from now, 5 years from now. It's not like there's really an opportunity for that dividend to grow 10% or 20% over the next 5 years. So you have built-in dividend growth model here, which is unique. And again, one of the reasons why buying and holding this asset class makes so much sense.
Makes a lot of sense. Built-in dividend growth model.
I like that. We never really talked about it.
Never really talked about it that way. I like that a lot. All right, we got a couple questions here from anonymous attendee. Is it not dangerous to base your investment decisions on what rent might increase to? We have seen rent being steady/slight decline in Jacksonville, which may continue for a couple of years.
I'd ask, what do we think would be dangerous, right? Let's define dangerous. To me, it would be dangerous to make assumptions if some years it happens and then some years it doesn't happen, but rent growth, especially over a 5-year window or a 10-year window, which is what I would advise rental properties to go into expecting, rents have always gone up over a 5 or a 10-year window of time in Jacksonville and across the country. In fact, there hasn't been a year where rents have gone down across the country in a single year. It's never gone down for the entire country. That's just a single year. And there have been a few years where rents have gone down in Jacksonville overall. The last time was in the Great Recession. So we're talking over 15 years ago. Single family rents last year went up. Single family rents went up the year before. So, to me, if I can look back at data and I see that never once in our country's history have recorded rents decline for an overall country, that gives me a lot of confidence that it's not likely to happen. And if it does happen, it's not likely to be a dramatic drop. I mean, we have gone through some of the most dramatic things in our history since I've been investing. COVID, foreclosure crisis, Great Recession, you name it, high interest rates, and rents have continued to go up. And then in your local market, you can do the research and see, hey, have my rents ever gone down cumulative in a 5-year period or a 10-year period? It just hasn't happened in the Jacksonville market, and I don't know that it's happened in any other market out there. So to me, I think you can count on rents going up with this caveat: you're buying and you're holding. I can't tell you what one year is going to mean.
Yeah.
There's too many crazy variables going on in the world, and there is a way where rents can go down year over year.
Mm-hmm.
But if you subscribe to the buy and hold mentality and you hold on for a full market cycle, I feel really good about you counting on rent increases.
Okay. Yeah. So it's basically in a short window of time, yes, rent is variable. Over time, 10 plus years, the data shows that it goes up. Right.
Absolutely.
So, and at the end of the day, when we're making buy and hold rental property decisions, the move is to hold it for a full market cycle. And then as you're looking at, if you're holding it for a full market cycle, then these historical averages smooth out over time, which is what we've seen, even if you started investing right before the Great Recession, as you did.
Exactly.
Awesome. So let's talk about these local numbers, GC. The rent data in Jacksonville right now. You put this together. Jack's median single family rent price right now is 1820. Single family rental rent price appreciation year over year right now is at 0.2%, so flat.
Mm-hmm.
Average rent price right now for JWB is 1535, showing that you're in that workforce housing sector, right? You're slightly below what the median is. 1,500 JWB homes rented this year, right? That's people that you signed into a new lease.
That's right.
In the last 12 months, rent collection rate at 98.2% and early termination / eviction rate at 0.4%. And this big whopper right here, this idea that you guys have collected 98% plus for 42 straight months. What do we want to take from this data, GC?
This is just a healthy performing rental market. And there's a lot of noise there's a lot of noise out there in all sections of the world and the economy and whatnot. Affordability is a real challenge, but the rental market in Jacksonville just continues to work. It's because supply and demand are in the favor of owning rental properties right now. There's demand challenges coming from affordability, but there's demand opportunities as well because we are in a growth market. There are supply opportunities as an owner of rental properties because we are undersupplied. So all of that coming together, you have an opportunity when you invest in real estate to separate yourself from the noise and all the craziness that's happening in the rest of the world, and just know that for decades and decades and decades, rents have worked, right? This is not something that you need to watch the stock ticker and think about when one world leader says one thing and it has an effect on another world leader and countries and unfortunately go into war and conflict. That's not changing the thesis here that people need a roof over their heads, and that with great property management, you can create a situation where somebody is really happy as a resident, continuing to pay rent, high rent collection over 98%, high lease renewals, low evictions, and then ultimately deliver a very consistent asset for a rental property owner. And at the end of the day, that's what we continue to see.
Well said, man. What do you say to Jeffrey Bolton here puts, all real estate is local. I would love to see a breakdown in Jacksonville, in my neighborhood. I know some of my recent turns have seen market rates fall. I think mostly due to factors specific to those neighborhoods. Others have held flat or grown.
Yeah, I think that's very real too, right? I'm giving you the stats for macro of Jacksonville. Within macro, there are certain neighborhoods, and each of these neighborhoods we can also look at a very local level of demand and supply. And there might be some neighborhoods that have more supply. A lot of times it's from the multifamily side of it. If there's a lot of new multifamily units that just came on in that micro neighborhood, well, that might affect your rents for this lease term. And it's very possible that your rents on your rental property for this lease term could be less than the previous time that they were rented. It can happen. But we need to think about it beyond just one lease term, because what is most likely happening, and Jeff, I'd love for you to chime in here, even if your rents went down on that in that property or in that neighborhood, I would imagine that they are a lot higher than when you purchased the properties 3 years ago, 5 years ago, 7 years ago. In essence, you're maybe a decrease in rents just this lease term versus where you were before, but you're probably playing with the house's money. That's very, very normal for some of our clients today. And then for a lot of clients, they're seeing rents go up every single lease term as well. So there are certain neighborhood dynamics, just supply and demand. It's natural. And sometimes this will happen. And then other times it will continue to go up and up and up. And this neighborhood that might see a temporary price decline for this moment in time because of supply might be the next neighborhood that's going to have, the most outstanding gains when it comes to lease rates.
Got it. I got a couple more questions here, GC, also from anonymous attendee. Florida is seeing an exodus of population for a change. How will Jacksonville be affected? Have you read that for the first time it looks like Florida might be like population might be shrinking in Florida?
No, I haven't read that.
I think it was a Wall Street Journal report talking about the big cities in Florida going down. I would say there's Florida. Florida has kind of like three worlds to me, right? It's like big city Florida, it's rural Florida, and then there's this thing that's happening in Jacksonville that I think is pretty unique, right? Like the idea that we are the number one corporate relocation capital in the United States, to me tells me that that is not something that's happening in Jacksonville. I can tell you that I'm somebody that in-migrated from Miami to Jacksonville, right? So like there's a lot of people that are moving from the Tampas, from the Orlandos, from the Miamis to less expensive places, right? So that's definitely happening. I think that Southeast Florida, Southwest Florida has gotten super overpopulated. Like there was like everybody bought stuff on like the Southwest coast as like second homes. That didn't turn out so great. They're probably retreating as well. But yeah, I think we should look it up. There was some kind of like Wall Street Journal report that talked about it. We should probably do a show on
Yeah,
that.
I just wrote it down. I
Yeah,
think it'd
yeah,
be good. I can get those stats and we can share those. I think what you mentioned is definitely happening. So migration between the state of Florida
yeah,
as well. And then I think we need to think about the policies that we have that are leading folks to potentially leave the country as well,
yeah,
right? Being in Florida, we're very close to international places for people to go and move to.
yeah.
So
True.
especially in Miami, you
Yeah,
might have folks that are leaving at a higher rate
yeah,
and going international
yeah.
as well. So
Yeah,
um,
I've definitely seen population drop in Miami, and
yeah,
that makes a lot of sense.
yeah.
Super overpriced and heavy foreign population. We have not been very friendly to foreign people in,
Yeah,
in the last couple of years.
policies have
Right.
changed
Yeah, yeah,
there.
for
So
sure.
there's certainly an impact
Yeah,
there.
totally.
But to get it back to Jacksonville, year over year, last year, again, we are the number one fastest growing population in the state of Florida. And if you rank us across the entire country, we are the number six
Yeah,
fastest growing population. So it may be possible that Florida population is going down because of some of those factors. But you've got a market here in Jacksonville where people are moving to. And so, obviously that's the backdrop of a lot of really good things that help boost your rates of return as a rental property owner.
totally. I assume same anonymous attendee is saying I've seen reports that home price appreciation in Florida will be negative 1 to 2% this year and possibly through 2028. Will rents follow this trend? I'm assuming that this is an out-of-state investor because we're painting the whole brush
Yeah.
around Florida. Again, very different places in Florida will have different things, but what do you say about that?
First of all, I just think these are great questions, and I would really encourage you to jump on the phone with our team
Yeah.
because it sounds like you have a lot of really great questions, and we can be a resource for you to be able to answer this. Everything that we share with you can be backed up with data as well. It sounds to me that you're very data driven, my friend, Anonymous Attende, and probably data helps you make really good decisions. So jump on the phone with us, go to chatwithjwb.com and just schedule a time to speak with our team. We'll be able to give you some information. One thing I'd love to add, though, is a lot of the questions that you have are related to Florida in general. When you're making an investment decision, there is no statewide real estate market.
Yeah.
You should be focusing on the metro. It's called an MSA. Jacksonville is a metropolitan statistical area. It's basically a node of economic activity, and it's usually a major city and surrounding that major city. So think of it in terms of that and start to analyze the data on where you want to put your money. Think of places in Florida like Miami, Tampa, Orlando, Jacksonville. Those are your four major metros. And then bring all of these questions and say, okay, let me take Miami as a potential investing opportunity. Pro, con, decide to do it or not decide to do it. Let me stack that up against Jacksonville, but don't lump them together because there's no statewide real estate market.
Yeah, that's a good call. Daniel Duran Garza says here, new name, I think. Daniel,
New name.
welcome to the show, man.
New question from a new name.
Yeah,
Love it.
good. This seems like a highly technical question too. So your conversation about dividend sounds like a multifactorial dashboard, but at the end is a basic list of metrics. Example, fundamentals versus exceptions or weird situations. Some fundamentals are population, rental increase, average income, etc. Exceptional could be politics, red state versus blue state. Oversimplifying just to make a point, thoughts.
So
A lot of words there.
okay, sounds like I think Danielle is asking me if I'm oversimplifying to make a point, or I'm having a hard time understanding the question.
Yeah, the way that I read this question, I think Danielle is saying essentially, we're talking about a couple like exception things like politics, red state versus blue state. And then there's fundamental things that are population, rental increase, average income
Gotcha.
in the dividend. I think I follow the logic of, are we oversimplifying to the fundamentals without including these like other things?
Gotcha. I think we have to focus on what really, really drives your decision here. And there are some factors that make more of an impact than others. And there are some factors that create a lot of noise, but ultimately don't make as big of a decision or as big of an impact on your decision.
Yeah.
All of the stuff when we're talking politics and we're talking about some of the other things that are a little bit that I haven't spoken a lot about in this discussion today, they all lead back to supply and demand, right? They lead back to population growth. They lead back to median income. And so those are inputs and they're important, but ultimately we got to pay attention to the things that really, really matter. Population growth, median income growth, right? Supply of housing. Those three things really, really matter.
Yeah.
And they can be affected by some of these other things like politics and whatnot. But I prefer to go to the data on the things that really matter and focus my attention there. Start to ask some questions on, why is this shaping up this way? Why is rental demand going up?
Yeah.
Why is population growth going up? And some of those questions may lead you to things like politics. But if we put a factorial dashboard together, I would heavily weight the inputs that actually the politics or the other questions are driving to. And those are population growth, median income growth, supply of housing.
Yeah. And I feel like when it comes to rental property investing, we have the luxury of a long time window, right? Like this is not a watch your stock ticker investment, right? This is like a set it and write it for like 20 to 30 years kind of thing, right? And I find that when you are making these kinds of like long-term decisions, it is the fundamentals that really, really matter, right? Like the politics and all that stuff, that can swing. That is a short-term thing.
That's a good point.
So I think when I look at things like that's honestly why I like that chart from Keith of these like adult milestone things. And we looked at it from a standpoint of like, is this a temporary thing that's happening or is this just really happening over time, right? Like if there is, if a certain population is not reaching a certain milestone by a certain age, like it's not going to change over time. Right? Like these kinds of things have these long tail effects that affect rental property investing. The supply demand of housing is a long tail effect that has been continually riding that curve for rental property investing. And then if you want to talk about the politics that come from it, that's because we have been in this for a long time. So politicians are trying to figure out little things that they can do to like make it more, appealing or whatever, or like more affordable. But it does come from these like things that you can see coming for a long time. It goes back to what you always talk about with real estate. You know the answers to the test before it happens, particularly when it comes to something that you're going to own for 20 to 30 years.
Exactly. I mean, the same basic thesis that we're investing in 2026 is the same basic thesis that we invested in 1996.
Yeah.
Right? It is not a new flashy object. It just works decade after decade after decade. Banks build a large part of their business based on lending to it because it just works. And a bank is not going to do something that's risky as well. So it just works. We don't need something new or flashy. And I do like the point that you made about politics. Politics can change, as we've seen, in a short time span. And so I spend less time thinking about the politics because I have seen it work no matter if it's red, blue, or whatever color we want to talk about it over decades and decades and decades. And it will likely continue to work that way too.
I mean, the politics thing to me is speaking from experience, right? Like, that I started in 2014. By 2016, I had another decision to make and we were coming on an election year. And I was like, I don't know what's going to happen in this election. So I just like sat out the real estate wave for like 10 years, not 10 years. I sat out the real estate wave for 6 years because the election came and went. I never made my decision. I was looking at different peripheral things of why not to do this when I could have at that moment, done really, really well buying something in 2016. Luckily, I came back. I bought a bunch in 2021 and now we're doing good.
Yeah. If you want to know the truth, I say to myself, I wish I would have bought more. I started buying when I was 23 years old. I say to myself, I wish I would have started buying when I was 18 and going to college. Like, so we all tell ourselves that. The important thing is that you started. And now you've got 5 doors and you're on your way.
Doing well. Last question here before we get out of here. Patron Santorius asks, Greg, when we talk about projected rent growth in Jacksonville, shouldn't we be separating inflation from real rent growth?
We can, and Michael is bringing up a good point there. We could take what the inflation is during that time span, and we could give what we would call real rent growth. You can do that with any of the investments that you make, right? You could take your return and then minus out whatever inflation's been during that time period. And ultimately, the point Michael is making is that's really how much growth your dollars or how much buying power you have taken home. And so that's absolutely a really good way to look at it. We could look at it either way. I just didn't do it here.
What you did do that I didn't get to that I want to share before we get out of here is the actual, like stats of like, are people renting and staying longer? JWB residents, resident satisfaction score, NPS top 4% in the US. JWB lease renewal rate of 75+%. So people are renewing at higher than a 75% clip. Rent collection rate at 98.2%, and Jack's rent growth from 2021 to 2025 at 24.5%. Anything you want to dig deeper in there?
I mean, if you look at any business, don't call this real estate or property management and just say, hey, listen, the clients are paying 25% more. Their payment collections over 98%.
Yeah.
They have the option to go somewhere else and they're renewing at a rate of over 75%.
Yeah.
And they are some of the happiest residents in the entire country.
Yeah.
You would say that things are working on both the macro side, which is really the discussion for today. Rent demand is working in places like Jacksonville. And on the micro side, you've got a property management team that is delivering wonderful resident experiences. So we're super proud of that. And I think it's a combination of both of those factors. You're in the right place with the right team in the right model. And that's where you have, this type of success.
I like it. I like the reframing of these are your customers, right?
Yeah.
Like, so look at customer satisfaction.
100%.
Works really, really well, really well. So okay, so good job today on the rents. We are right at time, so we're gonna get out of here. Next week we have a guest investor coming on to share the journey.
You guys are gonna love who's coming up next week. His name's Josh Wedding. If you haven't had a chance to meet him, he was at Summit. I had just a wonderful few days hanging out with Josh. A really, really inspirational dude. Sometimes folks will say that this show is inspirational, but when you get to meet Josh, you're gonna walk away feeling very, very inspired. Can't wait for you to hear his story.
Can't wait to hear Josh's story. From now till then, any advice you have to give, GC?
Don't be average. See ya.